Good morning, everybody. I'd like to welcome you to CNFT's pre-market analysis and commentary. What a great day to be alive, and we're ready to shake the CME's money tree once again today. You got to think back about all that we do and all the opportunity we have and really keep it in its proper perspective. It is opportunity. And we can play both sides of the market, and we can change our mind, and we can prosper in a down market. And very, very few other endeavors will allow you to prosper in a down or contracting market. So let's get after it today. Today, the news focus is going to be Draghi and the ECB. After reported consultations with Germany's chief financial officer, head of their bank, Draghi is expected to be supportive rhetorically. Will back away from corporate bond purchases. Will stick with his covered or asset-backed paper, and will try to support the market rhetorically. That's been what he's done in the past. So the scope and breadth and duration of QE1 will be monitored closely. And the euro has rallied overnight. So the euro coming into Draghi's talk this morning says that QE1 for the European Central Bank is going to be limited. We'll see if that actually happens. Draghi can move the euro 100 to 150 ticks when he picks up the mic. If we saw what happened last week when Japan's bank increased their purchases or increased their quantitative easing program, really by about 12%, markets just went nuts around the globe. So the equities and currencies will react to what Draghi says this morning. Now, if Draghi weren't going up the mic this morning, tomorrow's non-farm payroll numbers would hold the market in check. So we've got news to get through first. We'll probably have to make an adjustment for it. Like we said yesterday, if Draghi's QE1 is pretty limited in scope or smaller than thought, the euro will rally because it'll be printing less money, and the stock markets will probably suffer because there'll be less money chasing the stock markets. So that's where we find ourselves today. We've got resistance at 16 to 20. So our first sell is going to be 15 to 19. Then 23 to 27, all subject to what Draghi says. On the buy side, we've got really, really good support down here in this 3 to 6 area. So we're going to get started. We may have to move it higher at 1 to 5 for buy 1, and then 29 to 25 for buy 2. Once when the European jobless claims will hit, it will probably be buried by that announcement, 283K. My guess is it won't play today. It'll be the European Central Bank that plays. Productivity, preliminary, plus 1.5, never plays. Unit labor costs, as weak as the job market is, I find this number really questionable, but it's called at plus 0.8, and it's usually called up and higher. And we don't really see on the non-farm payroll numbers, we don't really see compensation hourly increasing all that much. So unit labor costs we'll have to see. That's where we are. So that's it for the ZN. We're going to look for a trading range because of tomorrow's non-farm payroll numbers. 15 to 19 is our sell. We're currently at 12.5. I think going for stops above the overnight session high is what this market will try to do. If it doesn't, the sell will come at 12.5 or 13. You know, a lot of you, if you've been involved in sports, and probably one of the most frustrating and challenging sports out there is golf. You know how detrimental the mind games can be in golf and how they really, really do affect the entire round. And the exercises, if you're a golfer, the exercises that you do before you address the ball for your next shot are done to calm the mind and help you focus everything on that particular shot. It's like next shot, no matter what you did on the previous one. When you exhale 3 or 4 times or dribble a ball before you shoot a free throw, same deal. When you exhale and bounce the ball 2 or 3 times in tennis, same deal. So in trading, you know, we can use these effective techniques in other sports that we're already that we already do to help get our minds right for trading. It's very, very similar. And, you know, while trading futures is not at all like gambling, because you are trying to forecast the future based on economic influence or news, it's not based on a random probability. The money management rules associated with gaming or gambling are very apropos. And those, you know, like in gaming, when you're hot, you know, you got to bet it up. You got to play the streak. You know, they don't last forever. And you'll find times when you're trading futures that you can do no wrong. And that's when you add the size and you really increase the size of your bet. And I know you say, oh, come on, Charlie, next trade. What if I'm not any good on that one? Well, you may not be, but that remains to be seen, right? Okay, we hope to buy on the cheap. Buy may come at 5 on this one, but because of the extra volatility in the 30-year and the news coming at 8:30 Eastern, we're going to try the 29 to 01, but we may have to kick that up to 05, and then 21 to 25 on the bond. We're going to play for that extra volatility. Now, the gold was pretty quiet overnight. Didn't do much. Support held where we saw it. We came in last night liking the 35 to 37 area. Did not quite get there. We really haven't broken it out to the upside either. We're just kind of, we're in a holding pattern. So right now you can see that we definitely have a buyer below 140, 1140. And the seller, the last rotate up yesterday, stopped at 52. So 140 minus 152, 1152 plus market is what we have right now. Okay, this is a prime example of our number 2 trade in our 3-2-1 methodology. No news. You just put a limit sell, a tick inside this high volume number, see what the hell happens. You have time to deal with it. About 75% of the time, you're not going to know what you have. The market's just going to continue to trade sideways around this number. 25% of the time, it'll hit that number and it's rejected. Okay, so the biggest news today for gold is going to be the ECB. If the ECB announces a larger than thought QE1, means they'll print more money, gold should trade up. If it's limited in scope and it remains with covered, what they call covered securities or collateralized asset-backed securities, then gold's probably going to resume its selling. And I think the 1085, 1100 will be the next stop. And it's not that far away. That's like 2 trading days away the way this thing moves. We had that 1.5 billion at the market sell the other night. Right here, could have been out of Russia. It took $20 out of the price of gold. The market usually doesn't recover from that because it's usually associated with central bank selling or a very, very large player with deep pockets. So some retracement, some probing up into these single prints. might be in the paper. So up above, we've got best resistance in that 60 area, plus or minus. And as it stands right now, we've got support at 35, 38. So 40 minus, 60 plus is where this market is right now. So based on the idea we got a P and stops above the overnight session high, we're going to make 49.51, sell one. It may take a 45 to get in. I don't know. A lot of it gets down to this news that comes out on the half hour. And then 54.56 for sell two. On the buy side, right now we're going to make it 39 to 41. And if we break that low, I'm going to drop it down to 30 to 32, pick up the next decimal support level at 1130. So we have news to get through on the half hour, and I don't know exactly what that will bring. My guess is it'll be rhetoric rich. Germany really runs the EU when you get right down to it, based on their willingness and ability to finance the EU's low interest rates and easy money to the PIGS nations and others now. Germany, because of the Russian sanctions, is forecast to head into a recession too, and that limits their ability to pay. Okay, the euro will be the focus. It's going to be the first one that reacts this morning. If you know the news, you really have the trade in this one. Long term, it's sell because the European Central Bank wants it lower, but if the earlier thought 1.2 trillion QE1, which is pretty much where QE3 was for us, in fact it's gone a lot higher than that, if this is cut, the euro will trade higher like we said yesterday. So we've had this pretty clean break in the market. We had one of them right in here in the 25, 35 to really 50 area. That's going to be sell one. Sell two, we'll pick this up here, the 65 to 75 area. That's where the structure is. London's low is 125. I think if the market heads down, it's going to go a hell of a lot lower than that. So we'll put 65, 75 as buy one. We're going to lean against support. And then 40 to 50 is buy two. And we'll adjust this after the news hits. You got to give it some room on the downside. I think on the sell side, you can be a lot more aggressive because they do want to take the euro down. But this thing, when Draghi picks up the mic, is capable of moving 100 to 150 ticks damn near instantly. It does take a little bit of time, but it is swift. And if you're on the wrong side of the market, you're in trouble. And because of the potential of the move, you can be slipped on your buy stops and sell stops and still come out smelling like a rose. Big market on these days. And you say, why? When you look at our markets, we have unemployment and FOMC days that are potentially huge days for us. And why does the European Union not have unemployment days like we do? And it's because once you're hired, you're not allowed to be fired. It's very, very difficult to get rid of employees. Pretty much like being in having a U.S. government job, a federal job. You can't be fired. And that's why European companies are building most of their new capacity outside of Europe because of that industrial policy right there. Okay, 79 is resistance. That's where we are. So 79, 79 and a quarter. Sell one. Sell two will be 50 to 75. That allows us to trade up into this area. It might be 78, 75, don't know, but I'd like to go for a little bit more. Last rotate down yesterday stopped at 77, 75, so buy one, 77.75 to the buck, and then buy two, 77.25 to 50. Okay, the E-mini. The E-mini really ran up pretty strong into yesterday's close. We had a close at 1850. Gave it back in the overnight a little bit. Like we said yesterday, you know, in the Republican, you know, Mitch McConnell's press conference was there would be no government shutdown, and what that really means is that the budget and the current levels of spending will go through as currently thought. It also takes you into next year where there will be no government shutdown, which means if the Obama doesn't get his way and the spending funds he wants, he'll veto the bill and shut down the government and blame the Republicans. So, I mean, if you're a poker player in the rest of this, you know, when you sit down at the table and you say, I'm not going to bluff, I'm going to play the cards that I have. If I bet them up, you can bet your life I got 4 aces or a royal flush. And if I don't bet them up, I'm holding nothing. So, I mean, this idea that things can really change in Washington with the present leadership in the Republican Party, unless their feet are held to the fire. I mean, they, like everybody else, say what they think the electorate wants to hear to stay in office. That's their #1 job, staying in office. And they get up there, they are back under the guidance of lobbyists, et cetera. So will the Republican cut the budget and cut spending and bring some fiscal restraint in? I mean, it looks pretty doubtful right now. So what this boils down to is status quo. The Fed will continue to run the market. They will continue to protect the market from a crash as best they can. The government is going to spend more money than they take in. No government programs are going to be cut. And so that leaves the way for higher prices based on either overt or covert QE4. And that's where we find ourselves. So we got resistance at 20. So our first sell is where resistance is 20 to 21, pretty much where it was yesterday. 24 to 26. If the ECB really gets after quantitative easing 1 in their announcement, this market's going higher, like it did when Japan did what it was going to do. 10 to 12 is buy 1. 5 to 7 is buy 2. The bias is still to the upside based on budget deficits, printing money, and an easy policy by the Fed. That won't change. The one bright spot they can point to is the stock market prices. And it's the easiest to manipulate, and the Dow is the easiest to manipulate of all of them because there's only 30 stocks there. And it's where the cowards go institutionally. So if the Fed's going to support the market through the Dow, those institutions that buy Dow stocks so they don't get fired by their shareholders will be supporting the Fed's activities too. Okay, we do have a B shape in the overnight market. Last rotate down yesterday stopped in the 850 area, our 8 to 10 buy area. So getting as close to 10 looks pretty reasonable to me. That would pick up this J period low and that D period low right in here. So 10 is kind of right in the middle of that. And then we have the low at 4. So our 5 to 7 picks up this Asian low at 550. Last rotate down was 650. So 5 to 7 picks up this area right here. Any questions on the structure or how the market is set up right now? On the E-mini,